second commodity stock that I want to talk about today, which is Polyus, listed over in the US under OPYGY, but I don't really think that's even worth mentioning because it practically has no volume there, so a better place might be the London Stock Exchange, where the stock trades under PLZL, and it sees volumes of between $5 and $10 million, so that's definitely tradable for small fish investors like myself. I think we might have another Rick Rule type of company here because Polyus is the largest goat producer in Russia, and it's also among the top, I think it was like top 10 goat producers in the world. And while gold does matter quite a lot to this company, obviously, this company also matters quite a lot to the gold market. But what I think Rick Rowe might like about this company is that they're among the lowest cost producers of gold in the world. And, he's mentioned to me how important that is multiple times because it gives them much more downside protection than their Western competitors, but it gives them the same leverage to the upside. And given how much gold this company actually sells per year, I'd actually argue that it gives them even more leverage to the upside than the majority of gold stocks that I was previously involved in or currently am involved in. According to a recent publication by Kitco.com, Newmont has the world's largest gold reserves by a long shot, and Barrick Gold comes in second with about 30% less reserves, and Polyus comes in third with about 15% less reserves than Barrick on here. Which, now that I'm saying it out loud, it kind of sounds like it's a bad thing. But this company is sitting on over 60 million ounces of gold, okay? Or I should better say sat on so much, as those are, by the way, numbers from 2019. And we are yet to receive the numbers of 2020. But anyhow, again, I'm not here to go over the basics for this company, right? This is a $25 billion corporation. They have a great website that I'm looking at over here where I learned more about the company. And, I would suggest you do the same if you're interested. It's pretty easy to understand again. But in summary, this company matters, okay? And with its $600 in all-in sustaining cost per ounce of gold, I would actually claim that it matters a lot. And you know what, as an anecdotal metric here, if gold was to stay around where it's at right now, around the 1700 levels, and the company's all-in sustaining cost was per ounce was to stay where it's at right now, and they were to never take on a new project, never discover anything new, the value of the gold that they're allegedly sitting on right now, or in 2019, was about $65 billion, whereas the price of the company, minus the cash, plus the debt, i.e., also known as the enterprise value, is at about $27 billion. And while this may already seem like a huge discount, you run the same calculations on Newmont or Barrick, you will come out with not the same, but comparable numbers, with a couple of differences being that, for example, while Polyus has about 15% less gold in the ground than Barrick, it trades at about 50% less in enterprise value, and it has much lower all-in sustaining cost, which gives them gross margins that are in excess of 77%, and that's basically twice the size of Barrick. In terms of price to earnings ratio, Polyus is also significantly cheaper than its Western competitors, and by over 50%. But historically speaking, though, its 7.88p ratio that we're seeing right now is in line with the 5-year average. Funny enough, I cannot say the same thing for the EV to revenue ratio, though, where the current metric shows about 5.5 for Polyus, but under 5 for Newmont, and about 3.5 for Barrick. So, while Polyus's EV to revenue is in line with its 5-year average, according to this metric, the other two companies that I mentioned are just cheaper. In terms of EV to EBITDA, Polyus is in line with Barrick and a little cheaper than Newmont, and it's also in line with its 5-year average. And the same goes for the price to book ratio, in line with the average and with Barrick, but cheaper than Newmont, that's for sure. In terms of dividend yields, though, Newmont's forward dividend yield is at around 3.5%. Okay, it's not a lot. And then Barrick's forward dividend yield is at around 1.5%. That's definitely not a lot. Polyus, however, has about a 4.5% dividend yield, which starts becoming significant. Right, so a quick conclusion on this incomplete valuation tells me that, first of all, Newmont is quite expensive, and Barrick's dividend is not at all attractive to me. And second of all, yes, Polyus is not super expensive, but it's not super cheap either, right? However, though, if you were to use a hybrid relative and an absolute valuation model where you take into account the gross margins with all the expenses, the debt and the cash of the companies, I haven't done it, but I think that will prove Polyus to be undervalued relative to the competitors. And I think that's thanks to a superior management with a superior business model that, although I know it's still comparable, it still differs in some key places from its Western counterparts. In terms of pricing, though, well, this is a gold stock, and I like the place where gold stocks are at right now. I think they might be poised for a run very soon, but again, the cheapskate in me just, then knocks on my ear and tells me that he'd very much like it if the stock would come down to the $85 support level, which this stock had to test twice before breaking through it when it was a resistant level last summer. So, if it comes down to it, it might prove to be a rather strong support. I'm not sure how probable that is, though, given that the gold prices have already started rebounding and the 10-year yield appears to be sliding back towards the 1.5 level. And there also appears to be another support level for this stock before that level, which is at about $90, at which point there will be about a 30% discount to the 52 weeks high, which Polyus, it's definitely gotten a nice little spot in my watch list, and I will be watching this one very closely. Anyhow, the next is in terms of valuation and even in terms of dividend yields and even in terms of price and stuff like that. All of those are trading at like multi-year highs as well. Their business models, they do differ some, but they're comparable. Which, by the way, is also why, if I'm to take a position into the Russian steel market, which I very well might, I'll probably like to diversify between all of these companies. But to prevent myself from ranting on about the same numbers and the same stories all over again, I have a different idea. So, I was thinking about it, and it's been a while since I've added free members to the Baby Farm Discord server, and, there's also a good reason for that. You can find out more about why I greatly believe that this type of serious communities should have at least some barriers for entry for protection. The easiest barrier that I could have put up was making it paid. And yeah, so I did, but there's also another way to do that, and then that's by giving people the chance to earn it, basically. And I also believe that the best way to really learning something is by doing it. So, I really love homework. I didn't used to love it as a kid, but now I really do now that I know its power. So here's a chance to get in that server for free and stay in there for life.